General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Yeah, it's good. Wednesday done. Hit this midweek. Anchor reassessments, confirm or revise anchor point status. Take a look. Tuesday still looks good. I think I put it on the 15-minute. Yeah, I did. Yeah, Tuesday still looks good. Buys template. I think the weekly range is pretty much done. I'm not sure if NFP can get us out this range. I think right now all eyes are straight of Hormuz due to high oil prices that weaken an economy. Boom. That was a good breakdown. Shifts in framework hit rate. This time 25. Choppy conditions. I think just look for your one move and get out the way. just up in there parlaying. Yes, with this PA time frame context. This is week 4. No, this is week 1. So this is previous month's range. Here. We haven't took previous month's high or low. Previous week's high looks like low hanging fruit. Week 1 in the monthly cycle. We around 50% previous month. I think the most probable target is previous week's high. Expansion mitigation signals. Price is not expanding. Every buy and every sell is grinding. It's 50-50. Framework accuracy. That's 52. It's choppiness. The actual overall delivery is easy. It's the execution part. Experience, it says watching these for conditions. Getting me better and focusing on different moving parts in my trading business. Case study vault reference. Not applicable here. Basically just like had a terrible sale. We took the high here. Excuse me. Took this high here, but left this high here. This is a weak high too. You don't necessarily have to keep this as a reference. And I don't need this or this. So my target here. And I still like higher up there too. I don't like the flat bottom. But here, definitely. I like to clear my throat. All right. And over here, we were way below. We went below the weekly, new week opening gap. Then we got another daily S&T. This took the did this. Nah, that's normal. We didn't take any low. You didn't take any low. Okay. Today was more manipulation. It's an engaged day, meaning confidence. We expected Tuesday to hold. No, we didn't get terminus. Mhm. Choppy day. The sale took forever. And we left a bunch of buy side liquidity. And it should be an easy target. Since tomorrow is NFP. That will be my soft bias target. H1. Looking for my previous day high for NFP. Final target would be previous week's high. going by fast. And me and Trump do something every weekend. So we open up with a gap and do this for the week. We getting tired. Okay. I like take this high and then decline. As far as interest in buy areas, mm, I have to see like intersection because the retracement is over. You have to find like a continuation setup or short term low get rated. And for higher prices, since Thursday already, is the retracements. I will look for a session low to pair orders for higher prices. Kind of the same here. We went a little bit further down. Let's see. Hold on. Nah. Maybe we just chilling here until Nasdaq catch up. I do not like this though. I don't like how close this is. The proximity. Alright, I can't do it like this. Let me grab a white box maybe. Take this off. These daily lows are too close. Was it shift? No, I think it. I think it's this way. That's left. Okay. And where's the right? It's up. Hold on. There you go. I had to hit up AI. It's 2-7. go. Hold on. That's the main difference. Because over here, we don't need to come clean up both of these. But over here, it's a possibility we can come take care of these. These are too relative. Yeah, that's about it. That's the main difference. I wanted to highlight those because everything else is just similar. How daily lows are in close proximity. Still bullish, but NFP is bad. Those lows will be an easy target. The number's gonna come out. The number's gonna be good. Then the market goes up. The number's gonna be bad. Then the market goes down. Because the Fed's supposed to be looking at labor with gas as high as it is now. Let's make sure this is only here. With gas as high as it is now, they're gonna have to consider that for rate cuts. We still got this fresh level here, which I like more than this. Unlike this. I would change this. It's better. We still kind of playing around this. But we still got the premium fresh FUG from last week. That's where we can start to sell. I would expect NASDAQ to be at previous week's high by then. This was the week high, huh? Here we go. This will work. Hold on. Let's go here. This will be better. Speed of DOL. Hold on. Look at this chart. Just chop on chop on chop. I still like high prices. Even though it's all chopped from here, from this point of view. Price is choppy. Getting used to space hit environment. NFP and other news. All right, that's that on that. Y'all have a good day. Peace.